Hey everyone, welcome back to Kingdom Wealth Creators. As you all know, on February 24th, Russia suddenly declared war on Ukraine, and the global markets all over the world fell drastically, including ours. In fact, 24th was an expiry for us here in India, and that day saw one of the biggest falls ever in the history of the Indian stock market. So, since then, the markets have been very volatile, and so I just want to share today what my experience has been in this highly volatile, news driven phase of the market and what can we do during such a time frame. Volatility is very high all over the world. If you look over here, you can see that the US volatility index is above 30 right now. In fact, on the 24th was when it shot up to almost 34 when Russia declared war on Ukraine. Basically, this has been the situation for a while now because of the potential conflict and then the resulting war that happened. And until peace comes to that region, I don't think we will see the volatility index fall come down, both in the US as well as India and all over the world. Right? If you look at the Indian VIX, the Indian volatility index, you can see that it shot up to 34 also on the day Russia declared war on Ukraine. And since then, it's come down slightly. It's somewhere between 27, 29 in that area for the last few days. But again, until peace comes, I don't think this would come down. And it has to come below 25 at least before we can see some sort of stability in the market. Along with this, you can see that, safe havens like gold has been increasing. You can notice that oil prices have shot up all over the world and that is also because Russia and Ukraine both export quite a large amount of oil and gas, and because of the war, the level of supply in the world market has come down, and because of that, the prices are shooting up. So all of this is adding a lot of volatility, uncertainty to all the global markets. So what do we do as investors? What do we do as positional traders? What do we do as intraday traders? So let's take a look at that. For investors, there's not much to worry. Of course, there is uncertainty, and we all, wonder what will happen if there is a sudden nuclear breakout or something like that. But the fact is that, the data shows that after every crisis, the market has rebounded. In case you want to see that data, you can look at this video that I shared about the Ukraine-Russia conflict before. Data clearly shows that even during a crisis, after the market falls, eventually it will recover. So for a long-term investor, you're safe, you don't have to worry too much. What you can do is to probably keep some of your capital dry or safe and look for dips to buy the market. For example, on Friday when the market dipped down to 16,200, that was a good support zone, and that's a potential area where you can invest some of your capital. I wouldn't say the entire remaining capital that you have. Another support zone is around 15,800. There's another one at 15,400. So what I'm trying to do is at these levels, when it comes down to these levels, I will deploy some of my capital to enter blue chip large cap stocks that have been beaten down. Examples could be HDFC, ICICI Bank, Hindustan Unilever, things like that, because most of them have come down 30 to 40% from their highs, all-time highs. All right, so that is what I would do as an investor. I would see this as an opportunity to get some more allocation or capital into the market at lower levels. Now, secondly, for positional traders like me, it is literally hell on some of these days because you don't know where the market is heading. The markets today are very news driven, and for positional traders, it is a tough market. So what I'm doing is trying to create strangles or long way out, deploying calls and puts very far out and just trying to get some sort of a profit without taking too much risk. So what can we do here? Basically, make sure that you don't deploy all your capital, and whatever you deploy it as far out as possible, and try to reduce the risk as much as possible, because the market is very news driven. It can swing 1,000, 2,000 points down on the bank nifty, or 1,000, 2,000 points the next day upwards, just like that. In fact, on Friday, for example, the bank nifty fell 800 points, then it recovered almost 1,000 points, then it fell another 500 points. So this will happen every day depending on what the news is on the global market. Let me share one of my experiences because of what happened on the day Russia declared war on Ukraine. On the previous day, February 23rd, I was sitting at with about 7 lakhs in profit, and I was at 315 or so. I was musing, tomorrow's expiry. If I hold on to this, I would end up with about 9.5 lakhs. So should I wait one more day? Should I close it out? And I kept thinking, and then the market closed, and I said, okay. And you won't believe it, the very next day at about 8 o'clock in the morning, we suddenly have the news Russia declares war on Ukraine. The bank nifty fell by 1,000 points initially, then it fell another 1,000 points, fell down a total of 2,000 points. The nifty fell almost 800 points. It was a meltdown. So I literally saw all that profit that I made throughout the entire month of February go down to zero, just like that in one day. So that is the problem that positional traders will face. So using the strategy I just mentioned as a positional trader, what I did for the first week of March was to take strangles far out of the money, both on the bank nifty and nifty. I only deployed about 70 lakhs of my total capital for this, and I made around 6 lakhs. So that was a very good return, but I was playing it very safe. I didn't deploy all my capital because we don't know what will happen the very next day. For intraday traders, well, it is really the golden opportunity to really make a lot of good money, to really shine in this market. But I want to warn you, a fair warning, the market is also very volatile intraday. Like I mentioned before, on Friday, the bank nifty started 800 points down, then it went down another 200 points, went down 1,000 points total. Then it recovered almost all its losses. It ended up in the green for a while, and then it fell another 500 points. So it was very hard to trade even as an intraday trader on that day. You can see here that I actually made a profit of about 1.8 lakhs on that day, intraday. But even then, I know how tough that was. It's so easy to burn your fingers even in such a situation because the market can go up and down very quickly. So again, as an intraday trader, I think it's important that you don't deploy all your capital, you play it safe. If you keep strict stop losses, you really need to know what the market trend is and just follow with that. And understand that the market trend can reverse 2-3 times in the same day. Like we saw on Friday, for example. First it went down 1,000 points, then it recovered another 1,000 points, then it fell another 500 points, all within the 6 hours of market trading that we had. So the short answer for this question, how do we trade in this volatile market, is basically, as a positional or intraday trader, don't deploy all your capital. Try to reduce your risk as much as possible. Keep strict and tight stop losses, and whatever profit you have on the table, take it. I could have taken that 7 lakhs profit, and then I would have enjoyed it. But the fact is that because I waited another day for some more little profit, I ended up with no profit at all, right? And as a long-term investor, please do not worry. There is a lot of uncertainty in the market. But one thing we are sure of, data shows that the markets will always recover after a crisis. So use the dips wisely to deploy some more of your capital, and that should be okay. In the long run, it will pay off. So thank you so much. See you next time.